All right, we got a wonderful setup for you today on a ticker that I think is about to do pretty well in the next coming weeks. Potentially a 30 plus upside, which is pretty significant. Can't complain about that, especially when you have a good starting point. So we're going to get into that. I just first want to address the S&P 500. So we are on a pretty steady tear. You know, we're not even seeing really any exhaustion at this point. So given the fact that it has been since the end of October, really, since we've had any sort of pullback, any long positions should be taken with some caution, basically. And I'm about to get into a long position, so keep that in mind, right? We're going to run down the setup real quick. We have the Bjorgum cloud right here, which is 3 moving averages that together make a cloud. It is blue when you want to go long. When it's red, you want to go short. Now we have a more longer directional moving average, which is the Heikinashi, the HA, which stands for Heikinashi market bias indicator right here. And you want to go long when the price action is above the market bias indicator and it is of the color green. You want to go short when it's red. All right. And then we have a couple of oscillators down here, the Trendillo and the MACD oscillator. Both you want to go long when they're above the 0 line, which is these dotted lines right here, and short when you're below them. Overbought on the Trendillo is when it's green, although it can, as you can see, tear for quite a while. So you want to pay attention to that and really actually just look for higher highs and lower highs and things like that to determine overall direction, as well as using your indicators on the price action. And the MACD, the blue line, the signal line, you want over, the blue line, which is the MACD line, you want over the yellow, which is the signal line. So you can see we've been on a tear, like I said, since October. There is nothing as far as a resistance in its way because we are at all-time highs. We're up on the weekly, by the way. So let's get into the trade call out that I have here. I'm going to explain exactly why I have this trade call out. So it is ticker symbol CTRA, currently has a price of $27.88, $27.80 post market. I'm going to turn the drawing on so I can show you previous local high is 36.41, which, as you can see right here from the current price action, is 30% increase just from the local high. It could go up to 41.93 for an all-time high, and if it breaks through that, let's see how much that would be. That would be up to about 48%, really. So there is room to run on this. We're going to run down all of the indicators on this trade setup. So once again, we want to look at the Bjorgum cloud. So we're going to get rid of this price action for a second right here so we can just see that. And you can see that we are all blue on the cloud. So not only are we all blue on the cloud, but we also have all of the moving averages blue, which is exactly what you want to see. We are bouncing off of the HA market bias indicator. So if you've never used this indicator before, it is very good at actually showing support and resistance. Some of the issues with the moving averages, whether it's an EMA or, for example, like a 200 period moving average, it doesn't change color as you go through it, and also it doesn't smooth out, right? So if you're using the moving averages, a lot of times a setup will tell you to go long once it's above it or go short once it's below it. But the market bias indicator actually gives you a little bit of room. It's sort of a cloud in a way, right? It's like a rectangular ongoing cloud. On top of it, it is Heikinashi. So it is filtering out certain price action, like right here. If we just zoom in, just because we're going above it doesn't necessarily mean that we're going to turn green. It has to sustain that price action above it. Okay, so that's why I really like it. So there's a bounce right here. You can see that it has been using the HA market bias indicator as a support since January of 2022. So we have a lot of history using it as a support. Bring up the Trendillo. It is an oscillator I really love to use because it takes in volume and other factors than just something what an RSI or MACD would do. You can see we are above the zero line here, signaling the beginning of, or at least short-term momentum is bullish. And we have not yet reached the green, which means we have more room to run. A lot of times it's really unfortunate using the Trendillo because it contracts and expands. A lot of times by the time you see that movement, you're already in the green, which is technically overbought. Like I said, there's more room to run because it expands and contracts. So there's positives and negatives there. So it's really great to see when we actually have something above the zero line on the Trendillo, but yet not yet reaching that blue line and turning green. All right, so I'm going to shrink myself a little bit here so we can bring up the MACD. You can see the signal line has just crossed, as of this week, above the zero line in the MACD, and it is above the yellow line right here, which is the signal line, which is sort of a slower moving, like a moving average line. And if you're playing this trade and you're getting in, you want to get in as far as the MACD is concerned when it's above the zero line, which it is, and you want to follow it. And now this comes into your strategy. Do you want to follow it as a certain percentage? Do you want to put a trailing stop loss on there? All of that is up to you. However, if you're just using the indicator as a way to get in and out, you want to get out maybe about here or here, basically as they cross. As the blue line comes below the yellow line that is bearish, especially when it's below the zero line. All right. Hope that makes sense. The histogram right here also shows the momentum of the difference, I should say, between the signal line and the MACD line. So you can see right here where the blue line slightly fell below the signal line, which is the yellow line. We went slightly red, right? Then we went back over. Right, and then there's more of a distance between the MACD and the signal line, and we have a bigger histogram. So that is how you use the MACD. That is all I have for you today. We're going to track this one. It is 2788, and it is March 28th, right? Yeah, March 28th. I mean, you got to keep in mind this is a weekly chart, right? So it's going to show you the 25th on the chart, but it is 28th on the date, so we're going to keep track of that. If you like this content, please hit the like button. It is the easiest way to help out the channel. You would be shocked how well it helps out a small channel like mine. We're really hoping to get to 400 subscribers, so if you like this content and want to see more call outs, hit the subscription bell and then the notification bell so you can see all of my latest content. That is CTRA and the overall market. We'll see you next time.